Success is all about preparation. A process that pushes all of us to realize our maximum potential. We are racing ahead, setting record-breaking numbers, advancing to new horizons. And reaching pinnacles in every climb. This is how we make it happen. This is how we claim the future. This is how we keep winning. This is Manila Water, the global Filipino water company.
Got no time to always keep an eye on the stock market? You can stop worrying about the stocks that you have and those that you don't after setting up your conditional order. Set, forget, don't fret. Now available on AB Capital Advantage. Here's how. Log in to your AB Capital Advantage account. On the Quick Trade tab, select either buy or sell and choose Stop Limit as type of order. Select a stock and indicate the number of shares. Set the limit price. It's the highest price at which you are willing to buy or the lowest price at which you are willing to sell stocks. Set the trigger price. Once the price of the stock reaches your trigger price, the platform will automatically start buying or selling the stock. Please take note. For buy orders, the trigger price should be greater than the current stock price. For sell orders, the trigger price should be less than the current stock price. Lastly, choose the term of your conditional order. It can be good for a day, a week, or a month. But please keep in mind that triggered conditional orders are only valid on the day they are triggered. That easy! With the AB Capital Advantage conditional order feature, you don't have to miss stock market opportunities and you can manage investment risk even when you are away. Find out how you can have access to our AB Capital Advantage platform by visiting our website.
Good afternoon, everybody. Thank you very much for joining us during this sunny and bright but a little bit slow trading afternoon in the market. But here in AB Capital Securities, we don't let the sentiments of the market constrain us in terms of talking to companies and bringing to you good information. In fact, we feel that during these times of slow markets, this is the perfect time to be learning about a new company, to be speaking to management teams of specific companies, especially those companies which we think you guys should be focusing on, looking deeper into. But before we get to it, let me introduce myself. I will be your host this afternoon. My name is Jep Tang, and I am an equity sales here in AB Capital Securities. To some of you here, I am quite certain that I look familiar to you. I can see some familiar names already. Thank you very much for always joining us. Now, for this afternoon, I'm really excited that you are able to join us because this company, or at least the management team of this company whom we're going to talk to, is a byproduct of of one of the most successful privatized companies way back in 1997. For some of you here, probably the young ones, you may not be familiar with this history, But when MWSS was privatized in 1997, because of a water crisis during the time, you know what? I was very young back then, and I really felt the water crisis during the time. The privatization of MWSS and the concession given to this company really help the Philippines over the next, I would say, 30 years, a little less than 30 years, in improving the lives of a lot of Filipinos. Now, I'm pretty sure that you guys know what you came here for, and indeed, we will be talking to the East Zone concessionaire, or at least that was what they were working on during the time. Um, Here in the Philippines, in Luzon specifically, but they've expanded and allow the company to talk to you about it. This we will be talking to the management team of Manila Water Company Inc. And this afternoon, before I bring them on board, allow me to introduce our speakers. We are fortunate today to be joined by the President and CEO of Manila Water Company, Mr. Jocot de Dios. And Jocot will be joined by their CFO and Treasurer, Ms. Gigi Bigel. And of course, we will be speaking primarily to the head of investor relations, Mr. Mark Orbos, who will be walking us through their first quarter results. Hey, Johot, Gigi, hey, Mark, thank you very much for giving us this privilege to speak to you this afternoon. And of course, thank you very much for walking our clients through uh, who Manila Water is for those who don't know you yet. And of course, for uh, giving us your results during the first quarter.
Thank you, Jeff, and to your team and those listening and watching this afternoon. It's our pleasure to be here. Thank you for having us. It's a great afternoon, as you said, to have a nice
Indeed.
chat about Manila Water. Hopefully, the rains come later so that the dam levels increase a little bit.
I don't know if our listeners, especially in the offices, what they would feel about that. But yes, thank you once again for being here. Now, I know that you have a lot of things to share with us. So let me just set the table. We will have a presentation, and this will run for the next 30 to 40 minutes. And then we will be spending the remaining time for Q&A. I'm pretty sure our customers will have a lot to ask you guys.
Thank you.
Thank you.
I believe Mark will be presenting your first quarter results.
Thank you, Jeff. Allow me to walk everyone through the presentation that we have for Manila Water Company. Just a brief introduction of who we are and a brief recap of our first quarter results. So first, we'd want to introduce who we are. We are Manila Water Company. We are a global Filipino water company which provides world-class water and wastewater services. We serve over 12 million customers in the Philippines and overseas, and we stand upon a solid and prolific operating history which spans 25 years. We have an established ESG agenda, with us being one of the pioneers of ESG practices and reporting here in the country. Going further, Manila Water is an operator and business builder of water and wastewater assets. Our business provides key services across the water value chain, as illustrated in the right portion of the slide you can see here. The water value chain covers the different processes, operations, and infrastructure necessary to harness, treat, and distribute water to communities and businesses. Equally important, the water value chain involves the proper treatment of wastewater before it is discharged back to the environment. From our beginnings in the East Zone in 1997, we have steadily grown our customer base and continued to work towards the efficiency of our operations. In the course of our existence, we have reached the following milestones, as you can see here. We have delivered 1.3 billion cubic meters of potable water and served 12 million Filipinos in Metro Manila and other municipalities in the country combined. We operate and maintain 1.2 million water service connections. We manage the three major water sources of what here in Metro Manila. We operate and maintain over 40 wastewater treatment plants. And as of last year, we expanded our wastewater network to over 370,000 sewer connections. As a business, we strongly believe that Manila Water is a sound investment, as we possess the following key characteristics. We have strong shareholder support from our significant owners. We have expanded our operational market reach to become a regional Filipino water utility player. We have proven and efficient operational excellence. We have a solid business model with stable revenues, cash flow, and returns. And last but not least, we have charted a clear growth strategy as we look to the future. First, on strong shareholder support, the Razon and Ayala groups provide a solid track record and expertise in various sectors as a strong support for us. The Razon Group, as seen here, is comprised mainly of ICTSI, which manages and operates 34 terminals in 20 countries across 6 continents. Bloomberry Resorts Corporation is the country's leading integrated resort developer and operator. And last but not least, Prime Infrastructure, the core infrastructure arm of Enrique Razon Jr., applies an integrated and comprehensive approach to the task of developing infrastructure assets, improving lives, and laying a strong foundation for the future. Our business portfolio includes water, wastewater-related assets across the Philippines, the ASEAN region, and the Middle East. We manage and grow our portfolio of businesses through the following structure. First, our parent company, Manila Water, is the water and wastewater concessionaire of the East Zone of Metro Manila, which now serves more than 7 million people. For our businesses in the country situated outside of the East Zone, our non-East Zone Philippines houses our operations in key municipalities and provinces such as Boracay, Cebu, Clark, and Laguna, among others. Our international business, on the other hand, under non-East Zone International, is housed under Manila Water Asia Pacific. This entity holds our assets in Vietnam, Thailand, Indonesia, and the Kingdom of Saudi Arabia. Finally, we have Manila Water Infotech Solutions, which focuses on vertical expansion of our businesses through offering innovative products and services. From our first concession in the East Zone of Metro Manila, we have expanded to operations to more than 20 subsidiaries in the country. Beyond local shores, we have expanded over the past decade from our first performance-based leakage reduction project in Zone 1 of Ho Chi Minh City in Vietnam to now having market presence in other areas in Vietnam, as well as Thailand, Indonesia, and more recently in the Kingdom of Saudi Arabia. We have over 25 years experience in water and wastewater systems operations and management from the East Zone in Metro Manila. The best practices we have honed in the East Zone are what brings with us in the new markets we enter. Before the privatization of Metro Manila in 1997, communities faced significant challenges in the reliability and quality of water and wastewater service. Despite these challenges, we persevered and worked closely with government and with the different communities in the East Zone. Through the innovations we developed, such as a territory management system and efficient network operations, we steadily gained efficiencies in service delivery and reliability. To date, we now serve over 7 million people in the East Zone and provide 24/7 water service to our customers. From a high of 63% before, systems losses are now at a world-class level of 13%. We have a solid business model which provides stable revenues, cash flow, and returns. Our regulatory framework is further strengthened by our water franchise. These provide us with the stability to continue our investments and operating efficiency initiatives, while at the same time provide the opportunity for us to spread investments over a longer period. For our efforts to improve network and expand to more communities, we have seen a healthy and steady growth in revenues, with the improvement in water consumption both in the domestic and commercial industrial segments. With efficient operations, our EBITDA net income margins have been maintained at healthy levels through the years. Our growth strategy is threefold. First, we protect and build our core in the East Zone by executing our service improvement plan. Second, we will expand our footprint in our domestic operations outside the East Zone by consolidating a regional presence. This allows us to maximize our resources while leveraging our operating competencies in key markets to realize value. Last, we continue to strengthen our presence in Southeast Asia and the Middle East for existing businesses in these markets. In parallel, we identify and assess opportunities in these new markets. Moving on to our ESG initiatives, allow us to share some updates. First, on environment, we continued our various environmental stewardship programs and partner with various key institutions for innovation and education. Second, for social, we have made good on our commitment to water security by ensuring water supply during El Nino via 28% group-wide raw water buffer, as well as the implementation of water supply contingency and augmentation plans. Equally important through our Manila Water Foundation, we were the only Philippine private organization granted accreditation to take part in the United Nations 2023 Water Conference with world leaders in accelerating the 2030 Water Action Agenda. Last, for governance, we recently published our revised sustainability policy, which reflects our commitments to our sustainability agenda. In conjunction with these, we released our integrated report in April last year. We published our ESG commitments to 2025. As can be seen on the left side of the slide, we have defined clear targets for water security, greenhouse gas emission avoidance, as well as water and wastewater infrastructure. On top of these targets, we have set out additional ESG commitments under our 3 key ideals of protecting the environment, helping communities thrive, and building a culture of care and trust. For these, we have set targets for non-revenue water, water reforestation as measured by land area and number of trees, regulatory compliance to drinking water standards, and occupational health and safety. Moving on to a brief recap of our performance for the first quarter of the year, a strong top-line performance in our East Zone and non-East Zone Philippines businesses. We see a continued recovery from COVID restrictions amidst robust tariff increases. EBITDA was up 55% to 4.8 billion. EBITDA margin improves 5 percentage points to 65%. Our net income is up 108% to 2.3 billion pesos with higher revenues with support from forex gain in line with the original concession agreement in the East Zone. Net margin improves 10 percentage points to 31%. And we continue our commitment to project and service obligations despite the lower capex. We proceed with the discussion of our consolidated results. Our revenues increased 44% to 7.4 billion pesos from 5.1 billion pesos last year as a result of robust tariff increases in both our East Zone and several business units in non-East Zone Philippines. This is further supported by the 5% increase in bill volume with a continued recovery from COVID restrictions. Our consolidated cost of service and expenses for the period increased 26% to 2.8 billion. This was mainly due to the following: higher direct costs driven by higher power consumption and power rates, higher personal costs with the increase in headcount in new line and new facilities, and higher overhead costs. Consequently, consolidated EBITDA increased 55% to 4.8 billion pesos for the period. EBITDA margin was at 65%, 5 percentage points higher versus last year. For items below EBITDA, depreciation and amortization increased 4% to 1 billion. The net higher expense was due to additional facilities in the East Zone, slightly offset by the lower depreciation expense in the non-East Zone. Moving on. Interest expense net was up 33% to 886 million pesos, mainly driven by interest on loans which were capitalized last year and accreditation of service concession assets related to a new facility in the East Zone. Forex gains stood at 6 million for the period due to the appreciation of the peso against the US dollar. The material change from the same period last year was caused by the reversion to the original concession agreement at the East Zone, which provides a natural hedge against Forex volatility by way of the foreign currency differential adjustment. The provision for income taxes increased significantly during the period to 538 million pesos. In the East Zone, increase in income tax was due to higher taxable income for this quarter versus last year's. For non-East Zone Philippines, higher tax income was similarly driven by higher taxable income. In all, these led to a consolidated net income of 2.3 billion for the first quarter of the year, higher by 108% from last year. Net income margin increased to 31% from 21%. Notably, this shows a 10 percentage points improvement in the said metric. For our balance sheet highlights, total assets increased to 197 billion from December 31 with the continued implementation of CapEx projects. Bank debt increased to 85 billion with debt maturity profile spread out over the life of our concessions. Average cost of debt for the group for the quarter inched up to 5.64%, while ratio of peso to foreign loan denomination was at 43 to 57. Return on equity improved to 12% with a noted improvement in profitability. Our balance sheet remains strong and compliant with our financial covenants. Moving on to the updates on our capital expenditures, group capex reached 3 billion for the period. East Zone concession accounted 84% with its 2.5 billion accomplishment. To show you, our continued ramp up of CapEx projects are in the areas of water supply security and the expansion of service coverage and compliance to regulatory standards for wastewater treatment. This slide shows several of our key water and wastewater projects in the East Zone concession, along with their respective execution progress. On the other hand, this slide shows some of our key water and wastewater projects across our domestic subsidiaries. As can be seen, numerous projects in our non-East Zone Philippines businesses are likewise being implemented to ensure sufficient water supply and reliable service to the communities that we serve. Thank you very much, and we open now the floor for questions. Jep, back to you.
Thank you very much, Mark, for that comprehensive overview of who Manila Water is, the reach now of your operations, as well as your performance during the first quarter. I just have to say that I just have to congratulate you on the good results for the first quarter. For us here, we are not really surprised by that, and it's something that we were expecting, given, of course, the tariff adjustments that you got last year. But definitely, thank you very much, Millennial Trader. Great presentation, he said. Now, okay, let's get right to it, Mark. At this point, I would like to also invite Jokot as well as Gigi to join us. Maybe some of our viewers will have some questions for you. Okay, here's the first question. This person seems to know your business quite well. How are your system losses compared to the past? I think, do you have CapEx to address system losses?
I'll take that. Thank you again to the AB Capital team. Right. Systems losses, we started 1997 at about 62-63%. We're currently ranging at about 12.5%, 12 to 13%. In fact, I recently just eyeballed the progression of our improvement over the 25 years. And we certainly have spent CapEx on it. Where we are now is a pretty good space. Obviously, amongst our 6 business areas, the East Zone has 6 business areas, the water losses vary from zone to zone. Some are better than others, but obviously the average is about 12.5% or so. Some are actually go down to 10 or 11. So we will continue to be spending on the reduction of non-revenue water, but not as much, because there is an inflection point at that trajectory, downward trajectory, that makes it, I guess, should we say, not as compelling to actually reduce it so much. But be that as it may, we're fairly world-class best practices when we talk about non-revenue water. So we keep that at bay. Hope that answers. Thank you.
Thank you very much for that answer, Jokot. The next question will be coming from Rose Tiang. Do you see more forex gains in the subsequent quarters?
Over to Gigi.
Not necessarily. We have US dollar cash holdings at the moment, and that cost for the small forex gains in the last quarter. But that cash will be deployed as we invest more in capex.
I see. Thank you for that, Gigi. Now, this next question will be from Grosby Tan. Can you provide a summary of the key points or important aspects of the revised concession agreement that we have read about in the papers? Very good question.
Yeah. Key points. Maybe, I guess, let me see. Maybe Mark, you can start us off with those key points. I know that there's some that we've prepared, but essentially, yes. I'll go the high level ones that I think they're fairly important to us. Is the FCDA mechanism? Yeah. So the mechanism, the FCDA mechanism on the amendment right now allows us recovery, an adjustment on FCDA movements based on a cutoff for loans as of June 30, 2022 on principal, not for interest. But for MWSS loans, full adjustment because we pay concessionaire fees or con fees to the MWSS. For loans incurred after, foreign loans incurred after, there's a collar, some sort of threshold that allows us to recover if it breaches. There's a range that allows us, which accounts for extraordinary depreciation or appreciation. Another feature is increasing the CPI adjustment to 75%. It was 2/3 in the previous go around. We're now at 75%. Anything you may want to add, Mark?
I can add.
Gigi, go ahead.
Yeah, I think it's also important that in the Seventh Amendment, the provisions on performance bond, MAGA, Material Adverse Government Action, and arbitration were updated to align with the revised implementing rules and regulations of RA 6957. So it's all what we did in the Seventh Amendment are improvements of important commercial points, and also the last 3 points that I mentioned.
Yeah, I think that's pretty
Did I miss
much it,
anything,
no?
Mark?
Yeah.
I know both of you and Jocot covered the changes and the key points of the RTA. Thank you. Thanks, Jeff.
Thank you very much for that comprehensive answer for the teamwork. Crosby, thank you very much for that question. In fact, I was waiting for somebody to ask that question. It seems that the product of Manila Water may seem to be simple, but I read up a lot about it over the past 5 years, and for good reasons. And there's really a lot of things that you need to study. It's like you're a lawyer for you to fully understand the business of Manila Water.
Oh, well, I am a lawyer, so
Oh, you
that
are.
makes it a little
Perfect.
easier.
Oh.
But
You know what, Johan?
uh,
I'm sorry.
I am a recovering lawyer.
Oh, okay. Recovering
Meaning to say,
lawyer.
I left the quote unquote the dark side, so I'm seeing the bright side now of my legal vocation or orientation.
Okay, I won't make the mistake of putting you on the spot or putting the spotlight on myself by asking you more about that. Let me just get to some more questions for the moment, and this is a good one. This is coming from Jaime Zalamea for MWC Asia Pac. What was the reason for the 49% growth in build volumes?
Ooh, I guess the Vietnam, as you know, we're in three countries: Vietnam,
Mhm.
small operation Indonesia, and then in Thailand. Uh, I guess it's really the growth. Vietnam, the Tu Duc and Ken Dong businesses have accounted for good growth, and these are industrial estates mainly that are serviced. So I guess it's my assessment, my personal assessment is following, let's say, COVID. Vietnam, by the way, didn't really change much, unlike the other Southeast Asian countries in terms of approach to COVID. So, and the demand, particularly industrial demand, continued to stay even or even a surge. Thailand, I think fairly even as well. As you know, our Thai investment services the Eastern Economic Corridor. In fact, we were taking a look. As you know, there were elections in Thailand, and we're paying very close attention to the Thai elections. And one of the things that stand out, whatever party makes it, as you know, there's the Pheu Thai party was number 2, and then the Move Forward party number 1. I think the consensus amongst the experts is that whatever happens, the Eastern Economic Corridor is too important for the Thai economy to play around with, to fiddle around with. So there is industrial growth there. There are major plans. So even if it's not as robust now, it's continuing. It's a good business. Vietnam, Indonesia, it's a small business, so and there's really insignificant. What we want to do though, is we're taking a long, hard look at these assets abroad. and try to rationalize the approach. These are assets that we uh, slotted into when we took over, i.e., this is the new group of Mr. Razon. And there are a few things that we want to tinker with or improve to try to maximize the utility of the investments that we've made here and to expand in a very meaningful manner. So that means getting more involved in terms of scrutinizing demand, getting more involved in the I guess in the operations as well to the extent possible. So I hope that sort of addresses the question. Thank you.
Thanks for that, Jokot. I guess let me, if I may, just give or ask a follow-up question to that, Jokot. So moving forward, how do you foresee MWC APAC business contributing or accounting for the, I guess, the revenue as well as the net income of Manila Water?
Look, I'll have Gigi give her views to that. I will approach the question on a broader from a broader perspective, right?
Mm-hmm.
Um, um, we clearly where we are now, it's overwhelming 80, 85, whatever, 90% is East Zone, and the rest is non-East Zone, whether that's fields, really just non-East Zone fields because we equity account for the outside of the fields. What we want to do is obviously, as we protect our core, Mark alluded to that in our strategic pillar, we have to protect the East Zone. But we want to bring up the non-East Zone growth to a meaningful level so that you're maximizing your potential efficiencies, minimizing the risk of having all of your operations in one contiguous area. I guess it's a with that sweet spot. It's something that we're trying to figure out in terms of understanding a little bit more these markets. And I guess it's a bit of a roundabout way of saying it's work in progress, but it's work that's being paid attention to. And I don't know if Gigi has any additional insight to that.
Yeah. Near term, you will see East Zone contributing still um, majority or at its level right now. What we are trying to scale up is the non-East Zone business by investing in majority through majority ownership. You see today are minority investments in Southeast Asia. What we want to do is look for assets which we can own, um, which we can operate and own majority and consolidate at the enterprise level. That's how we want to do it in the next 5 years, 4 or 5 years.
2 3 years.
Oh, okay, 3 years.
The mandate just got sooner, Gigi.
So the person who's supposed to deliver that mandate's not in the call, so I can say it and it'll just trickle down to him.
I was wondering if the message was delivered via a messenger app over there.
He's on it. He's on it. He's on it. He's on it. We're very assiduous when it comes to chasing potential leads and deals.
Yeah.
Mhm. Okay, I have a follow-up question to that, but let me go through the audience's question. This is from Thin Rosales. Her question is, how much more do we expect water rates to hike for 2023 and 2024?
I think
Gigi,
that's
you want to
published.
answer that?
Yeah, it was published, right, Mark?
Yes, that's correct. If I
Yeah.
can just provide the info, for next year, we're looking at about 5 pesos. So that's a 14% for 2024. And then 2025, that would be about a little over 3 pesos. Thank you.
Yeah, let me
Actually,
just complete that. So at the rate rebasing last year, or we call it rate rebasing 2023. So we've agreed already on the tariff in the next 5 years. Much as we would like a one-time big time as of January 1, 2023, we were not allowed to do so, and but staggered, although higher amounts in the front loaded. So like Mark said, 14% next year, 8% the year after, and then it gradually declines to 7%, then 2% and 2%. That will complete the 5 years window. Jakat, you were saying, sorry to
Now,
interrupt.
actually, if you think about it, the rates are fairly reasonable. In fact, if you look at other areas in the Philippines, there are rates that are higher. No, in fact, we're hearing at least of diesel rates in areas in provinces that do not have water, costs of about 60 to 70 pesos per cubic meter. Obviously, you blend that with surface water or underground water if you have reliable water. Where we are right now, we're actually lower, in fact, still than our neighbors in the West concession. So I think for the service that we provide, I think consumers are still getting a very good benefit because we continue to provide our 24/7. I mean, we want obviously to enable us to deliver more security in terms of water reliability, the infrastructure, etc. We obviously need to charge more. Otherwise, it doesn't work. There's no such thing as a free lunch. We have a huge commitment, about 100 billion pesos over the next 5 years. We're spending a lot of that already. We're beginning to spend because we have to deliver these huge water infrastructure projects. So you can never really compare the cost of the water we provide to the value that water has in our lives. I guess is what I'm saying. Thank you.
Thank you very much for that, Jokot. Actually, this next question, I know that was like an elephant in the room, but this next question will allow us to maybe, or will allow you to maybe talk more about those rates and the capex that you will need to spend moving forward. The question from Frank Gan. Frank is one of our usual attendees. In the past, what has been MWC's experience with El Nino? How
Yeah.
did you prepare to ensure sufficient water supply during such periods?
Oh, thank you, Frank. I'm about 2 years in the company now, so I can't really give you much color on the past experience with El Nino. I think what's more important, though, is the second part of your question: is how to prepare to ensure sufficient water supply. Uh, that the answer to that is we need to be ready to draw on water supplies apart from Angat. Angat gives about 95% of Metro Manila, both the east and the west zone. And one bad El Nino year can ruin that supply and I guess compromise it. People have to realize that the water utilities are not the only takers of Angat water. You have Angat Hydro, which needs it for power generation, very critical, okay? Because I don't know if people understand that when you have a system-wide outage, Angat Hydro is the first one to kickstart the system. Secondly, you have NIA, which is the irrigation administration for farmers in Central Luzon. And the third, there's another water concessionaire, which is the Luzon, the Bulacan, the San Miguel water concession. So we need to win ourselves away. So that means if we get about 6,600 MLD from Angat, that's our allocation. We need to build a sufficient buffer outside of Angat to deliver that. So where are we now? We're still some way off. Okay, we have a couple of projects in Laguna Lake, Cardona, which is delivering 100, 110 MLD. Okay, we have the East Bay, which is the East Bay also in Laguna, Cardona's in the Central Bay. That's about 50 MLD coming this October. We've started awarding and started work on 200 MLD, East Bay 2. We hope to complete that the end of next year or the start of 2025. We have an 80 MLD treatment plant in Antipolo, Calawis. We're starting work on a 438 MLD Upper Wawa project. Maybe the first one is 220. We've even built a 20 MLD facility within our wastewater facility in Marikina. Okay, so we have to, number one, make sure that we prepare a buffer. At the end of the exercise, I was counting the other day, excluding Kaliwa, which is expected to come maybe 2027, 2028, we would probably have about 800 MLD as a buffer to our 1,600 if you add all of these projects that we have in the pipeline. Okay, so that's the first part. And the second is we need to make sure that we're responsible in terms of our usage. So that means maintaining our NRW numbers, right? Paying attention to the demand so that we're not supplying demand if there's no demand, etc. So it's also our supply management orientation here, and essentially there are other potential sources of water, and it's a lot of it is quite technical, whether it's backwash water, etc., etc. But I guess overriding all of this is we have to protect the dam levels in Angat and La Mesa, and we have to prepare for buffer water supply stock over the next couple of years. So that's pretty much what we're doing.
Thanks for that comprehensive answer, Jokot. Actually, I'm as an investor and as an advisor to both high net worth and institutional clients, I really like companies that are growing their capacity, preferably by double or more. But you've mentioned I'm really hanging on to that 800 MLD expansion of yours outside of Kaliwa. My question actually is, are you saying that currently the 1,600 MLD that you are providing to East Zone customers is really not sufficient?
Uh, we have 1,600, but my demand is, I guess, about 700 up or down. We have alternative sources. We do have groundwater sources, meaning deep wells, which are allowed by the NWRB to draw on. And we have other small bits and pieces that we can draw on. So we're able to manage this. Plus, we have La Mesa. La Mesa is pretty much a reservoir of last resort, but we protect it zealously to make sure that it maintains current levels. So we're able to. I don't think anybody within the East Zone is having any issues now with water, but it doesn't stop us from having to be more vigilant. We pay attention to the rains. Every day we get a report on levels and make sure that even before things could possibly turn bad, we are anticipating this. We have regular conversations, not just at the leadership team level, but even with our chairman and the board.
Yeah, that's correct. And you know what? Filipino population is not really declining. It continues to grow. So definitely there will be demand for water. Okay, this is from one of our regulars here also, Irving Chen. Could you provide some insights into your balance sheet? Do you anticipate higher financing charges for the upcoming year?
GG.
For the second question, yes, higher financing charges because we have committed at the rate rebasing 2023, we have committed capex worth 95 billion. So you will see our balance sheet grow with more financing. But we are also we are keeping dry powder for our international expansion. Like you've heard Jokot say the tall order a while back. So we're keeping our eye on having enough buffer also for international expansion. So there, yes.
Jokot,
Well, you
even
you have
mentioned that.
to take. Sorry. Oh,
I was just gonna talk
Jokot.
about KSA.
Ah, KSA is one of those potential expansion internationally, but I'll let Jokot expound on that.
KSA, we are working our investment in KSA. We have the Northwest and the East clusters. We have a couple of partners. So the same mantra that Gigi had shared, we're trying to get there as well. As you know, I've said before that the price at the end of the day is a concession. If that's feasible, then let's go attack it. in a meaningful way. If it's not feasible, let's pivot and find out. So we are chasing that still. We are maybe just a year in the northwest cluster, and we have our new head of international business operations of flying there regularly to really um, see how we can expand our footprint in the Middle East further.
Oh, okay, this is a good question from Frank Gan. A lot of customers will benefit from this. Pardon for a MWC 101 question. What drives your margin since the business is highly regulated?
uh, Good question.
Yeah, very
Um,
complicated answer.
Very complicated question. If I told you, I'd have to silence you. But at the base of it, right? It's managing it's prudently managing your costs, right? It's really the simple. It's your top line and then your costs, right? So we embarked last year on a very serious evaluation of operating expenses and costs associated with. So hence, at least in the East Zone, we've seen an improvement. You saw the Q1 results compared to same period last year, improvement in EBITDA margins. Obviously, the revenue is a function of the tariff adjustment, but that's already a given. I have I have monthly meetings with the six uh, business zone leaders. We go through each of their operations for the past month, and now we've introduced a mindset that they own their own revenue, and not just the revenue, the attributable OPEX and the attributable NIA. So it's like a P&L. So I get to compare. I saw actually a draft for the last yesterday, the other day, that you could see that margins, even amongst the different zones, are different. They vary. So that gives me an avenue to attack this. So it's that mindset that we apply not just on the business areas, right, but the entire enterprise as well. Same thing with the non-E zone. You watch your costs. That's the first thing. That's the first order of business. We generated a lot of savings, right? But obviously, many of those would be one-time savings, and then as you learn to be more efficient, you try to figure out how to increase your revenue base. Something as simple as altered or unresponsive meters or erroneous meters. We have programs to try to read that so that increases. It gives an accurate reading. There's still a lot of tampering that goes on and really cut your costs. So I guess that's the base. That's the base. That's the base of it. At the end of the day, what the regulator needs to see is that you comply with your service obligations. 24/7 water, water that adheres to the Philippine national standards, a response time of X for any incidents, non-revenue water, etc., etc. Hope that
Thank
answers.
you. Yeah, it does. In fact, I just want to say this early, but I would like to thank you guys for being here because for a highly regulated business such as Manila Water, normally management teams or investor relations officers are not really too brave to really come out and discuss their business, mainly because of the nature of the business. But you guys are here, and you know what? Judging by the questions of our customers, they're really interested in trying to understand the business. In fact, this question has been asked twice, and I really have to ask this question. The question goes, let me show the first one. How much of your reported 108% growth came from the tariff adjustments and how much from higher build volume? Now, this was also asked by another regular, Your Majesty. How much of your more 100% increase in income was due to higher build volume and how much of that was due to the tariff adjustment?
Uh,
I can take that, Jokot.
okay, go ahead.
Yeah, simple answer. Very simple answer. As you've observed, because of the tariff increase in the past 3 years, we had a big jump in tariff, um, effective January 1 this year, right? And hence the jump from quarter to quarter due to tariff increase is around 80 plus percent. Could be 87, 85, right, Mark? If
Mhm.
I remember my numbers correctly. So not much due to build volume,
That's right.
but it's more the tariff increase.
Well, I'll challenge that. It's not much. That statement. It's not much. It's actually pretty hefty because given that, well, historically demand has grown about 2%, 2 to 3%.
Mm.
Uh, we track demand growth now. It can be as granular as say, well, we try to do same store sales, right, for customers in the restaurant business chains. We compare it to 2018 to today. So I have that data. We take a look. We compare domestic um, sales versus commercial. In commercial, there's like 13 subsets. Some are better than others. So it's it's scientific like that, and we try to get these discussions. I think that as we continue, particularly in the commercial industrial side, where we have very healthy rates. Hopefully, when it finally catches up to when you say pre-pandemic levels, we see a bit of an uptick. But it's not a. I, I guess the philosophy is the rate the increase due to rate. That's last year's news. We're
Mhm.
taking a look at the
Yeah.
demand now. So that's what we hammer in whenever we meet with the operations teams and the sales teams. Yeah.
Mhm. Okay. In line with that, I hope that answered your question, Your Majesty, as well as Irving. Now, from Ian Binondo, how much will the intermittent water shortage have an impact on your earnings in the subsequent quarters? Will there be any intermittent water supply?
No, as far as we're seeing it, there's none. We have enough water supply for the year, as
Mhm.
far as we can see. Yeah.
In
So I
line
don't.
with this question, Joko, and since you've mentioned earlier that you weren't there yet during the last El Nino phenomenon, I just researched it. During the time that was, I think, 2018,
Yeah.
water shortage at the Angat only dropped below critical level, below 160, towards the tail end of
Yeah.
the El Nino. Um, with that said, do you do you have any forecast of how El Nino will be, if ever there will be one, and how bad it will get?
Yes, yes. We do that. We have obviously a team internally. We coordinate with the NWRB. That is the agency that regulates the flow of Angat, and they have plugged that into their models. I think we're at about, I don't know, we're 180 something
Mm.
meters level today in Angat. Compared to last year, same time last year, I think we're still a couple of meters above, right? And we ended last year at about 205, I think, 27 or something like
Yeah.
that. And in fact, it increased because there was a storm. We went up to about 213, if my memory serves me right. So yes, we do, but we take a more conservative approach. If they say the level's going to be like this, we say it's going to be lower, and that's how we define our plans, just to prepare for the worst case. But there's very, I would like to think that um, the NWRB does this very scientifically. In fact, I just had a session with our own internal forecasting team, and we'd like to be able to enhance even more our ability to be more precise with respect to the flow. We believe it or not, we have these dynamic models that tell you water quality, ebb and flow of, let's say, Laguna Lake, uh, right? Because we have operations and I've seen it. Angat, not so much. I'm saying, look, we should try to figure it out because um, Pag-asa and NWRB have certain I guess, models or assumptions that they input. I'd like to be able to see what's behind that and forecast it a little better. But so far, fairly within there. So look, no matter how good how sophisticated the tools you have, you only have to look at first world countries in like the U.S., where they cannot figure out, um, these um, rains that come and go, droughts that come and go, right? So
Mhm.
at the end of the day, we're still subject to Mother Nature. We can only do our best to try to figure it out. So I guess going back to the short answer, yes, we pay attention to what NWRB says. They draw from Pagasa. We have a more conservative approach. We're trying to improve it every day.
Mhm. Thank you for that. Now, we have, I think we have time for two more questions, but the last question is something that I can and should answer. But here's the last question for you, Joko, Gigi, or Mark. What other projects do you currently have under your pipeline? A question was sent to me in line with this one. Do you have any other projects that you're looking into in other countries, APAC or KSA?
Yeah, we've disclosed that we remain keen on expanding our footprint where meaningful, when meaningful, outside of the Philippines. We spent last year on our time more focused on two things: ensuring that we get the rate that we wanted, and number two, streamline as much as possible our operations, our cost of operations. Okay, that's done. Now we're taking a little more, a more serious look at growth internationally in along the parameters that Gigi enumerated. There's a lot of deals outside, but we have to be a bit, picky and deliberate when we choose. We want as much as possible. We need to control. We need to operate, and as much as possible has to be brownfield. So that means there's already a revenue being generated. We can do expansion for potential greenfield, but bottom line is we're not going to necessarily wait for 3-4 years to build and inaugurate a facility. Another thing is we need to be in partnership with strong local hands or very strong global hands who understand the particular territory we're in. So Southeast Asia is something we're paying attention to, given that we are in it. We know it, being Southeast Asians. So that's something that's a given. The Middle East, yes. We're looking potentially Latin America. There are always opportunities, a little overvalued, I think, but I'm sure we can find out. I was just in Singapore the other day. Talked to a couple of interesting utilities, their views on growth, etc., and how to expand their footprint. So yes, I cannot disclose obviously specific projects, but there are a number on the table. Whether they eventuate or not, it's speculative at this point. But we are now focusing on that. Thanks.
Okay, thank you very much. This last question is for me to answer, and thank you very much, Mark, for this question. It's a good way to close this session. Mark's question is, what do you think is the fair value of MWC?
I can't
Uh,
answer that.
you beat me to the punch.
I
Okay, I'm
won't.
more than willing to answer. I'm more than willing to answer this, and I guess I am here for this for these kinds of questions. But for us, Mark, once again, thank you for this question. For us, our fair value for Manila Water is 25 pesos. It's actually very conservative. Consensus expectations points to 30 pesos per share. For us, it's 25, and this offers a 31% upside to a little bit more compared to the current market price. But let me tell you that Manila Water also gives 5% in terms of dividends. So that would be a total shareholder return of about 36-37% for the year. This is practically one of the reasons why we think Manila Water is the best shelter for your money, especially given the views globally. It's a very defensive product. That's what we think. And yeah, I'll leave it at that because I don't want to oversell it. But that's if you keep on following our reports, we always talk about Manila Water, especially when they have developments. But you know what? I don't want to hold our guests any longer. Once again, I would like to thank Chocot de Dios, the President and CEO of Manila Water, Gigi Miguel, the CFO and Treasurer of Manila Water, and of course, the Head of Investor Relations, Mark Orbos. Thank you very much once again for being here with us this afternoon, and I hope that we can have you again when you release your second quarter results.
For sure. Thank you,
Thank you.
Jeff, and to your team, and to
Anytime.
the a lot of interesting questions. I must say.
I know, I
I
know.
I like it. So I have to have my lawyerly, I guess, orientation, lest I say something that's, inappropriate. But
But you know,
session, very good session.
yeah, it was. And again, I would just like to thank you guys for bravely coming here to the show and answering as comprehensively and as clearly as you can those questions. I agree with you. I think that Manila Water deserves more attention, especially given the expansion plans that you have been doing, and of course the things that you have been doing to improve water supply here in at least in the East Zone. So I'll leave it at that. Thank you very much once again, and we hope to see you again very soon.
Thank you.
Thank
Thank
you
you,
very
everyone.
much as well. Thank you. Bye bye.
Bye.
Bye.